Well, good afternoon, everyone. It's right on midday, so I can't say good morning anymore. Warm welcome to you all. In case you haven't met me before, and I know some of you I have met before, my name is Andrew Grimer. I'm a partner in the property team here at Bardia Perry. So welcome to my webinar. Just a bit about my background. If you don't know me, I've been practicing for nearly 30 years, which kind of seems like a long time. It makes me feel old, but I'm not really. And like all baby lawyers, I started out doing a number of different areas of practice. Started out in general practice, and probably after about the first 5 years, I settled on wanting to be a property lawyer, and have been practicing property ever since. In fact, the very first piece of legislation I was given by my first boss was the Retail Leases Act. And he said, read this and understand it, which I kind of did. And so over a big chunk of the last, big part of the last 25 years or so, it's been solely property. And of that property, it's been buying and selling of real estate, whether that be commercial, industrial, retail, and residential, and it's been leasing, and with the leasing, again, it's been all sorts of assets. It could be anything from as small as a little 250 square meter office suite or kiosk in a shopping center, all the way up to a 70,000 square meter factory warehouse. My client base is anywhere from a small mum and dad small business or private investor, all the way up to a subsidiary of a multinational company, government department, local council, SMEs. So it's a variety. So that gives you a flavour of who I am and the style of my practice. So as I said, today I'm going to be talking about. I'm going to be giving you a practical guide to leasing transactions, and in the process, hopefully, guide you through avoiding some of the common traps. And what I'll be drilling down in trying to bring out avoiding traps and guiding you through the practical issues is, first of all, the key issues in the documentation that you would use in leasing transactions. And then I will proceed to cover off mixed use developments and leasing. And why I want to cover off that is because as you roam around our various capital cities, suburbs and town centres and regional towns, mixed use developments seem to be, and have been for a while now, the flavour of the month. And so they have their own unique issues when it comes to looking at leases, whether you're a landlord or a tenant. When I'm presenting, I will try and present it as balanced as I can from both a landlord and a tenant perspective. So sometimes I may veer and sound biased in one direction or the other, but I'll try and where I can cover off from both angles. Also, if you have questions, put them in the chat. I may not get the opportunity to answer them because I do have a lot of material I'm trying to cover. If I don't, I'm happy to reach out to you afterwards or have a chat to you afterwards. Also, you'll see at the final slide, you will see my details. So again, if you have any other further questions, you want to discuss things further, always happy to chat to you. All right. So first topic, navigate. As I said, it's navigating the navigating lease documents and the key issues. So the main documentation I'm going to cover off are the heads of agreement. That's going to be the first because that's always your preliminary document in a leasing transaction. An agreement for lease, incentive deed, fit out deed, car parking license, deed of guarantee, the lease, and the disclosure statement. All right, so let's start on the heads of agreement. Now, I say heads of agreement, but some of you may have encountered another, the same document, but maybe called something different. It could be called letter of offer. It could be called invitation to treat. It could be called summary of lease terms. It could be called commercial terms. Some people call it an agreement for lease, which I kind of struggle with. But the point is, it's a bit of paper but it's more significant than a mere bit of paper, that will give a summary of the commercial terms. And depending on the nature of the transaction, the parties involved, it can be very, very brief, or it can be extremely detailed. But it is an important document because that is the document that usually the landlord will draft the lease. Sometimes the tenant's lawyer will draft the lease, but generally the landlord or the landlord's representative or landlord's lawyer will draft the lease. It's what they draw on to be able to put the lease together. And so why it is important is because that people will always, even though, and I'll cover this off in a minute about how binding that document is, it's always a document that people will go back to say, well, the issue wasn't covered in the heads of agreement or was covered in the heads of agreement, and this is why we're pushing this particular term. I feel that the heads of agreement, and I call it heads of agreement, but you could call it a letter of offer if you want, or HOA or whatever. To me, it's important that you cover off as many details as possible to avoid the ambiguity when the time comes to draft the leases and to negotiate those lease documents. A lot of the time, and yes, and I think actually, and I'm sure some of you encountered this, there's valid criticism in how slow the process takes to negotiate a lease document and to settle a lease and to sign it. But part of that, sometimes, not always, is that there is some insufficient detail when a lease is being prepared, insufficient, people haven't worked out certain items or certain nuances. And then when the lease comes to then be prepared and submitted to the tenant's lawyer will pick up certain issues the parties haven't thought about. And whilst I don't think it's important, I don't think it's necessary for the heads of agreement to be have all the terms, because you might not foresee every term. You have as much detail as you can, and particularly where there's something that stands out, you put it in that heads of agreement. So if there's an incentive, for example, being provided, or if there is a certain important way in which that incentive is to be paid, or if there's a certain mechanism as to how rent is to be ascertained, or if there's a certain something unique about the way the bank guarantee is going to be provided. For example, I had a matter recently where my client was obtaining an e-guarantee, and they are unique. There are certain terms that you'd normally require for a bank guarantee that you can't have for an e-guarantee. One might be expiry date, for example, the ability for that e-guarantee to be transferred to a new landlord, for example, or it might be if you provide a traditional bank guarantee, whether you want an expiry date or the bank guarantee to be fixed for the term. I mean, there's all sorts of things, or no directors' guarantees or personal guarantees. The list goes on, but there are a number of things in that will come up later on when you're negotiating the lease. And if there's something that stands out, put it in the heads of agreement, and particularly where the transaction is involving a fit out by a landlord or a build of a premise by the landlord before the lease commences, even more so that you've got to put the detail in the heads of agreement. Things like delay events, sunset dates, liquidated damages if the build doesn't happen by a certain amount of time, baseline specifications, contributions to category 1 costs. And I'm going to cover some of this when I'm actually talking about the documentation as well, some of these issues. But these issues probably need to be hammered out at the agreement for lease, at the heads of agreement stage. If you do that, you're going to avoid debate later on. But there is a flip side to that, and it's this. And there's quite a lot of case law on this point, which is a heads of agreement a binding agreement for lease? Now, some people will assert the more detail you have in the heads of agreement, the more likely it is to be construed to be an agreement for lease and a binding agreement for lease for that, because the parties had a meeting of minds of the main terms. So, but what the case law also says is that in order for that heads of agreement not to be a binding agreement for lease, the parties need to evince a sufficient intention for that to be so. So what I always recommend my clients to do is put a clause as big and as bold as you can at the end of that heads of agreement that says the parties do not intend this heads of agreement to be a binding agreement for lease or lease, and the parties are not bound until they've entered into a lease documentation on terms and conditions acceptable to both parties. And if you think it's not an issue, mark my words, it is. I have seen, and from a myriad of landlords and in a myriad of jurisdictions across Australia, where landlords will at times want those heads of agreement to be binding. And I particularly have seen it in the retail area. I've seen it in the commercial and industrial space, particularly in WA, South Australia, and Queensland. And the issue is that, and particularly for some of you who are here today, whether you are a big company or a government department or a local council, for some reason, you may decide after a heads of agreement is signed and before a lease is entered into, circumstances change, budget changes, and you don't want to go ahead with that deal. So you want to be able to walk away. And there's a point being fair that there's going to have to be a trigger point, and that's when you've signed the documentation. But until you do so, you may want the right to walk away, particularly if there is something that hasn't been covered in that heads of agreement that's in the lease or lease documentation that you don't like as well. Part of that notion of being able to walk away from a heads of agreement, though, what you also always have to look at is sometimes it will say the heads of agreement is binding, is not binding, other than a couple of clauses, and they are the confidentiality provisions, which is great because particularly if you're, depending on who your organisation is, you don't want the world to know about this deal. It's going to be confidential and only to be shown to your professional advisors. But also they will often say, even though the agreement is not binding, it is binding in terms of what happens with a holding deposit. So for some of your transactions, the landlord will require the tenant to pay a holding deposit, usually a month's rent, maybe a bit more, maybe a bit less. And then if the deal goes ahead, that deposit gets released to go towards the first installment of rent. But if it doesn't go ahead, we also need to look at the fine print, because sometimes it will say the deposit is not to be released, or it will say the deposit is to be released, but only after the landlord's reasonable legal costs or landlord's legal costs are taken out. If you're a landlord, you would want that. If you're a tenant, you may want to try and have that clause struck out so the deposit is fully released. Or if you're going to agree to contribute to the landlord's legal costs, then it would be reasonable legal costs or a capping of those costs. Also, where there's a lot of debate is, okay, well, if a deposit can be released as referenced in the heads of agreement, what if it's a retail lease? Because some of you may be aware, under the Retail Leases Act, tenant the landlord is not permitted under the law to recover lease preparation expenses. So my view would be they can't really take out of the deposit the legal costs if the lease doesn't go ahead, if it's a retail lease. To avoid ambiguity, the parties should talk about that and clarify that when they're negotiating the lease. So that's my comments on heads of agreement. And as you can see, I spent a lot of time talking about it because it can create a lot of drama down the track if you're not careful. And so I think it's important to spend a lot of time on that document. Some parties won't get legal advice on those documents. I actually recommend, depending on who you are, you should get legal advice on them, particularly if you're not experienced in negotiating them. Okay, you get the heads of agreement done. Let's talk about an agreement for lease. When is an agreement for lease normally required? It's normally required on either a greenfield site where a landlord is going to build the premises for you, or where it's an existing site that's going to be retrofitted or modified. An agreement for lease is more common in an industrial setting, but it can also be used in a commercial lease. And I say commercial lease like an office setting or in a retail space. But more often than not, in a retail space, it'll be more an incentive deed or a fit-out deed, which I'll go through those documents in a minute. So what's an agreement for lease? It tells a story. It says, provided that it will tell a story, effectively say, landlord owns property, the tenant wishes to enter into a lease for for a premises that will be built by the landlord, and once certain preconditions are satisfied, the lease will start. And it's it's in those preconditions that there is a lot of detail in agreement for lease. Again, a very, very important document. So what are the key elements of an agreement for lease? The most important one to start with is, particularly if the document is saying the landlord will carry out certain works to build the premises, you'll want to make sure that there is adequate description of those landlord works, detailed plans and specifications, or a detailed brief. That is a critical document. Particularly if you need a building bespoke, if you're a tenant, like to your needs, a certain height, minimum height, or certain turning circles, or certain level of concrete, or minimum level of fire safety, or if say you're a refrigeration company, minimum level, certain specifications to put in a refrigeration unit, or minimum number of loading docks, those sorts of things are going to be critical. Or if there's certain things to be included in landlord's works that may be normally included in tenant's works, installation of cranes, for example, installation of racking. Those things need to be noted out in those plans and specifications. Also critical then is if there's tenant works to be done, and again, the tenant wants to have clarity on what the landlord approves, maybe you may want to include that in the document as well, so that then there's clear distinction between tenant works and landlord works. Part of that process is also documenting the timing of when those works are to start and end. So, for example, landlord's works might not start till the landlord gets the approval to do those works. The tenant's works may not be able to begin till the landlord finishes their works. Then there's the discussion around perhaps if the tenant needs to integrate some of those works in the landlord's works to save money. So an example that might be putting in, if the tenant is responsible for putting in the air conditioning, coordinating with the landlord, so the landlord allows the tenant to put in their ducting before, paneling goes on, etc. Then there needs to be a discussion about that. There needs to be a discussion around who is responsible for what approval. So landlord might be responsible for getting approval for works, but who is responsible for approval for tenants' works? And on top of that, who's responsible for the approval for the particular use? And that is a very critical point as well. So, for example, if you're a company that needs to operate 24/7, and that is a critical element, and, for example, council comes along, or rather approval authority comes along and says, you can only do, you can't do 24/7, or you can do 24/7, but between 7 p.m. and 7 a.m. you only have so many vehicular movements, or only have so many decibel levels of noise. Your operations, is that going to impact on your ability to operate, and therefore the viability of the deal? And therefore needs to be a discussion around that to be an ability to terminate the agreement, for example. Or if conditions come back for consent for the building works that mean that the building can no longer meet the tenant's minimum use requirements, whether it be height restrictions, number of loading docks, type of vehicles that can come in and out, well, then that needs to be considered as well in documentation. Or, for example, if the landlord will get approval, or the landlord wants to vary their works, what are the outs there? Is the landlord restricted in varying their works to what the authority says, or only with the tenant's consent, or is there going to be a mechanism to appeal if parties don't agree? So there's a whole lot of discussion that needs to happen. And again, some of this stuff probably needs to be nutted out at the heads of agreement stage. The agreement for lease may cover off incentives. Some do, some put them in a separate incentive deed. And so I'll have a separate discussion on incentives shortly. Security. So often landlords will say, well, we want some form of security to cover our risk before we start to build. So some landlords will require a bank guarantee or cash deposit at the point of signing the agreement for lease, even though the build might be a year away, or build might not be completed for another year or 18 months. So again, have a look at that. How does that look? Some landlords require a bank guarantee provided in stages. How do you calculate that bank guarantee if rent is yet to be determined, because rent is being calculated on a rate per square metre? Which leads me to another point, which is how do you actually calculate rent? And so again, there might be some specific mechanism which would be in its crudest form, rate per square metre. The parties might agree to some form of capping of that rent. Some parties may agree that, particularly if if you've got a budget around a certain level of rent, and if the size of the premises is such that it then becomes too big and then your rent's too high and your ultimate bank guarantee calculation is too high, you may need to rethink that. So whether there needs to be a capping on rent, or whether you don't want the premises to be below a certain size, and therefore, beyond it, if the final survey, or if the size is going to be below a certain threshold, whether we want to go ahead with a deal. And therefore, what does that look like? And again, often it comes down to a commercial negotiation. Again, something you probably want to put in the heads of agreement before you even hit the agreement for lease. How is the commencement date determined? Is it just when the landlord's works achieve practical completion? Or is it some later date? For example, the later of a hard date and completion of tenant's works, or the earlier of a hard date and completion of tenant's works, or the earlier of the end of a fit out period and completion of tenant works, or full stop, it's when the landlord hands it over to the tenant upon practical completion, or upon practical completion. And sometimes there's a distinction between handover date by the landlord and practical completion, because what does practical completion means? Some landlords will advocate it's just when we finish our works, bar a few minor modifications or defects, etc. The tenant's position, we know it's when an occupancy certificate is given. And that is critical, because a tenant can't occupy without an occupancy certificate. An occupancy certificate being a bit of paper that says, by either the local council or by an authority, like a certified, it says premises is suitable for occupying. There's a bit more than that, but it's an important, very important document. So if I'm a tenant, I wouldn't want commencement date to be determined until at least occupancy certificate is given. Also, sunset date, a critical date, i.e. the date by which everything has to be done by the landlord. What is that date going to be? And often that's driven by the tenants. If a tenant is moving into a building from somewhere else, they need to be out of a building by a certain date, usually because they have a termination date, they have to plan their shifting, etc. Is that sunset date going to be a hard date? Because sometimes leases will have an ability for that sunset date to move because of valid delay events. There's one thing to say estimated practical completion, and that date can move because of valid delay events like bad weather, industrial disputation, etc. But that sunset date, I often try on behalf of my clients to advocate to make that a hard date. And if it can't, and if practical, and then on top of that, and then what happens if that hard date isn't met? The parties can maybe walk away? Liquidated damage is going to be paid if practical completion isn't done by a certain date. How do you calculate liquidated damages, particularly if you've got to move from one premises to a temporary premises while the existing premises isn't built? So there's a lot of thought in there, and I've had all sorts of interesting calculations over the years to cover off that particular issue. On top of that, I think I've covered approvals. The other one is assignment as well. So particularly if the build has a long life, and particularly if there's an incentive in there, but even if there's not, you want to make sure that if there's a clause that says if the landlord happens to sell that property before the lease commencement, they make sure they pass on the obligations under this agreement for lease to a subsequent purchaser of the property. But similarly, if you're a tenant organisation that is going to, for some reason, undergo a corporate restructure, you have the ability to pass on your rights and obligations on the agreement for lease to another party if that needs to happen. So that's agreement for lease. And again, there's a lot of detail in there, but often when I'm doing an agreement for lease transaction, they usually take the longest. An incentive deed, again, that may be embedded in an agreement for lease, the form of the incentive, but often the incentive is included as a separate document, particularly where an agreement for lease is not required. So the main issues with the incentive deed are how much, how is it going to be passed on? Is it going to be a mixture of a contribution of a fixed amount, a rent-free period, and which is like, say, 6 month rent-free period, 3 months rent-free? Is the incentive going to be an amount amortized over the life of the term? So an amount equal to 6 months rent, but then spread out evenly over the term of the lease. So each month your rent is reduced. Clarification about if it's a combination of those things, or the tenant has the ability to choose which one, when to make that election. Also, if you're a tenant, you need to look at the tax implications of which form of incentive you take, being clear that usually outgoings are not included in the incentive, but if you think they are going to be, then make that clear in the documents. Timing of when it's going to be paid, particularly if it's a fixed contribution. So is that fixed contribution going to be paid when the tenant has completed their works, their fit out works, because usually their contribution is funding those works, or is it going to be when a tax invoice is provided, those works are done sufficiently to the landlord's expectations? What are the conditions, or what is the timing? And also, say, for example, some landlords say, we're not accepting an invoice off your contractor, but if you want the invoice to come from your contractor, if it's funding your fit out, say that. Often there's little quirks in incentives. Say, for example, covering off the tenant's agent's fees, because often tenants will engage a tenant advisor. So that could be bundled up in the incentive. As a result of that incentive, who owns a fit out if the fit out's being funded by the incentive? Often landlords will say, well, we're contributing, but we want the tax benefits of the amortized of the tax write-off. So we'll own the fit out that we will fund for the life of the lease. So we get the benefit of the tax depreciation, but hey, tenant, you then will have to retain the ownership at the end of the lease for $1, so then you can be responsible for its make good. So again, a discussion whether that is going to happen. So that's very important. And on top of that, landlords may want to try and get a charge over the fit out to the extent of what they fund, and we call that usually a general security charge, like under the personal property securities regime. And conditions of payment. So, for example, as I said before, like, say, is it on a presentation of a tax invoice? Some tenants, particularly I see this in the retail space, it's common for that incentive to be paid in tranches and stages. Is the incentive deed assignable by each party? Again, similar to an agreement for lease, the ability for either party to assign their rights and obligations under that incentive. If you're a landlord, if you sell the property, because I've seen this happen where I've made it for a client, I'll never forget it, this is about 10 or 15 years ago. The landlord sold the property, new landlord in, tenant goes to say, hey, landlord, where's my incentive? And the new landlord says, sorry, that wasn't disclosed to us in due diligence in the data room when we bought the property. So yes, there's a contractual right against the old landlord to get paid out that incentive, but it's kind of not how the client wanted to manage it. In the end, it was sorted out, and the landlord reimbursed, the old landlord reimbursed the new landlord, and then my client was able to get their incentive. But you just look at that. And similarly, if you're a company that is wanting at some point down the track to sell your business, assign your lease, do a corporate restructure, you want the ability to be able to pass on the benefits of that incentive, particularly if it's an incentive that has a life over the term of the lease. And then that then leads to the other point about incentives, which is a biggie, which is the good old clawback. And so what a clawback is the ability of the landlord to recover that incentive back from the tenant. And the most draconian ones will be incentives is repayable if the lease is assigned, sublet, tenant parts with possession, tenant in default, and the lease is terminated. Where usually it lands in the marketplace is if in the event of if the lease is terminated due to the tenant's default, that's when there's a clawback. If there's a incentive being provided and the tenant is in default but recovers and is no longer in default, there's usually a suspension and a catch-up payment. But you need to really look at that. And the other one is where landlords have the ability to pay the tenant, where there's an ongoing amortization of an incentive in particular. The landlord might have a clause in there that says we can choose at some point to pay it back in a lump sum, particularly say if they sell the property. You as a tenant, depending on the extent and size of that incentive, may wish to say, no, we don't want to do that because there might be a tax implication for us in doing that. In addition, sometimes there is incentives which are in the form of landlord's works, and landlords actually do the works. If it's that, then again, it's similar to an agreement for lease where those works need to be documented. And then there's a question mark over who is responsible for make good of those works. Okay, that's incentive deed. Then we've got fit out deed, probably similar to an agreement for lease. As I said, more common in an office, often so that it's in an office environment or in a retail setting. Very similar, and so I'm not going to go into a lot of detail around fit out deed because it's very similar discussions to an agreement for lease, but it's very much generally it's very much focused on who is responsible for the fit out of the premises itself, and often it's more relevant for where a premises is already built. A few things about that. This will often be more where you will see, and you need to take care about this as a tenant in particular and a landlord. What are the landlord's works? What are the tenant's works? And so the detail there is going to be important. Sunset dates are going to be important. And often there'll be still a formula in that document for handover, fit out period, determination of commencement of rent and commencement of lease, who is going to sign off on the landlord's works and the tenant's works, and again the link between the lease commencement and rent commencement. It's often all in the incentive, the fit out deed, and sometimes the incentive will also be documented in the fit out deed. But the one big issue I often see in fit out deeds, because they're often in a retail context, it's the concept of category 1 contributions. And normally if I'm doing a physical presentation, I say hands up who knows what category 1 contributions are. They are generally speaking, so if you're sitting in, like I'm sitting in my back room at my home and doing this presentation, I look around, I see, like for example, lighting points, or I might look over at my ensuite and say, drainage points, or my kitchen, and there might be drainage points. Or there could be air conditioning ducts. So there's often a base shell that is provided by a landlord. Now, if the base building works need to be modified in some way, those things are often what you call category 1 works. So often the debate is around who is responsible for which category 1 costs, and then we say category 1 contributions. And the industry standard seems to be it's around capping of category 1 contributions by the tenant. So if you're representing a tenant or you're representing a landlord, this issue is critical. So there's no debate later on. If you're a tenant, it's critical, because if you've got a budget for a fit out and unexpected category 1 contributions come up, because they often do, I've seen this for years, whether it be in a coffee shop or a restaurant or a retail, even a retail clothing shop, and you've had a basic budget for the project, if there needs to be variations, you probably want those contributions to be capped. If you're a landlord, though, again, you've had a budget to fit this out to give this to the tenant, and there's been a whole discussion and negotiation about this. You want to make sure it's crystal clear how much the tenant is going to pay and contribute towards that, because obviously that impacts on your maths of how much your return on your investment is going to be over the life of the lease. So that, I cannot stress enough, has got to be clearly worked out, both the quantum of the contribution by each party and what goes into the definition of category 1 works, because often I see that as to be a bit of a debate as well. So again, the more detail, the better. And again, as I said before, around an agreement for lease, similarly with a fit out deed and an incentive, and particularly the category 1 contributions, you'd be smart to address that when you're doing the heads of agreement. As impatient as people get, I cannot recommend that enough. And some other documentation that is critical and again, some of this might be embedded in the lease, but sometimes it's a separate standalone document, is a car parking license. Big issues with car parking, particularly where you're leasing an office. If a building has car parking attached, these days it doesn't. Often it's managed by a separate company, but if it does, or if you're in some sort of business park setting or industrial park setting or retail complex, that's where the documentation of car parking is important. So first of all, are the car parking spaces fixed, or does that, and if they so, attach a plan, so documentation saying car spaces, 1 to 30. Specify the number of spaces and designate those spaces. A lot of landlords will have in there, they have the ability to move those spaces around and vary them. I've seen that go horribly wrong for some clients. For example, I never forget a client that was leasing in a building, had the ability for the landlord to move around those spaces. They wanted to put a childcare centre in the building and therefore give the prime spaces for the childcare centre for drop off and pick up near the lift. That meant that the tenant, the other party who wasn't a childcare centre, had their spaces moved and scattered everywhere. So if space is important, as in proximity to the premises, particularly if you need accessibility, you need to look at that. Beware of the concept of stackers and tandems, which is where they have car parking spaces stacked one on top of the other, or tandems where one of your cars ends up being locked in by another. If you don't want that, carve it out. Some of my clients will want the car parking spaces to be used for other things like loading and unloading of shipping containers, or used as a storage space if you're a retail type setup, or storage of stock, or put a cold refrigerated storage unit on that car parking space. If you need that, you need to address that when you're negotiating the leases. And sometimes that might not be permitted, particularly if it's in a strata building. There might be rules that prevent that. So you need to look into that clearly. And then what the terms of that license agreement are. So are they going to mirror the lease, or are they going to mirror, or are they going to be different? So is there going to be, say, for example, a car parking license fee? That's normally based on a different measurement, but is it going to be reviewed on the same basis as the lease, or different? Is the term going to be the same as the lease or different? Is there an ability to assign that license to an assignee of the lease? Is there ability to sublet those spaces if you sublet your lease? I see some car parking licenses where parties, particularly in an era where more and more people are using public transport, do they instead have in there an ability to terminate at a certain month's notice for a number of the spaces? Little things like, depending on the geographic location, there is a car parking space levy. I think in Sydney, it's Sydney, CBD, Chatswood, Parramatta, and North Sydney. But whether there are some more in time, usually that's passed on to the tenant. So that's your car parking license. Then deed of guarantee, again, this is where a landlord requires personal guarantees. Usually it's directors from the tenant company. I say it as a standalone document, but often it's a term of the lease itself. The critical aspect of that document, well, first of all, when I for tenants, I say, don't ask for it. Push back on providing a guarantee altogether. If I'm a landlord, I push for it, but I say to the landlord, well, you might get directors' guarantees, but what assets are behind them, and is it really worth the paper it's written on? You may be better off having a bigger security, like a bigger bank guarantee or bigger cash deposit. But be that as it may, the key issues in a guarantee are, when is the guarantee to be released? Often there's debate about, well, should the guarantee continue on even if the lease is assigned, even if the tenant company is dissolved? So at what point is the tenant's obligations removed? And often there is a hidden clause in a guarantee provision or deed that says the guarantor charges their assets to the landlord. So you want to be careful that if you're representing a tenant. And also, what you have to be careful of is if the property, say if you're a tenant you're assigning your lease to another party, particularly if you're selling a business or doing some sort of corporate restructure. And often when I say guarantee, it's not just, it could be actually even a corporate guarantee from a parent company. When that is provided, and there is a change, making sure that the deed, if it's a separate deed, that deed is released, that deed is, so that the guarantor is no longer on the hook. In a retail setting, there are some rules around when a guarantor can be released, particularly in New South Wales. If an assignors disclosure statement is served, not only is the assignee released, but the outgoing guarantor is released. If you're replacing guarantees, say new guarantor is coming in, then you've got to obviously do a new deed or do a variation of lease. But that is again something to really look out for, and so there's all these traps on revealing. Now the lease. You can see there's all this discussion about all these other documents, but the most critical one is the lease. But the reason all these other ones, particularly if you're doing a property, like I said, where something's being built, all these other documents are important first. But okay, the biggest thing about the lease is whether it's a retail or a commercial. I'll step you through in a minute the differences. You have to think about the different versions depending on the asset being leased. Is it a vacant land? Is it a building? Is it land and building? And depending on the type of asset will depend upon how the property is described and some terms. For example, in New South Wales, if you lease all of the building, no drama. But if you lease a building and only part of land, there's a question mark over whether you have a deemed subdivision if the lease is over a certain amount of time. So often I'll say to the clients, to get around having to muck around doing a plan of subdivision and the expense and the cost of time that will take, you might license only part of the land and lease the building. The starting subject matter again is all those things I just talked to you about in the heads of agreement, and sometimes in some of the other documents may feed through into the lease. Rent review, outgoings, bank guarantee. But some of the big ones that come out in my practice a lot are make good and redecoration. Who is responsible for what when the lease comes to an end? Does the tenant have to return the premises to a bare shell, or do they simply return it to the way they found it? Does that change depending on whether an option to renew is exercised? The importance of getting a condition report to reflect that condition. Redecoration, which is different than make good. Redecoration is usually repainting or recarpeting or reflooring. Again, is that subject to fair wear and tear? And I often joke to my clients, there's a difference between cigarette burns, although no one smokes anymore, versus fading because the sun is shining in. Issues like cutting bolts off at ground level when racking are removed versus core drilling and filling a hole. The cost is significantly different depending on, especially if you have a whole lot of racking. Outgoings, in particular, what we're seeing a big issue of at the moment is if the lease doesn't address it, particularly where state jurisdictions have introduced land tax surcharges for foreign landlords, the ability of the landlords to pass those on. If land tax is paid on a single or multiple holding basis, cappings on management fees, strata levies, particularly. So because strata levies, you might have general strata levies versus sinking fund special levies, maintenance costs. So those things are absolutely important. Sprinklers, who is responsible for installing in sprinklers? Is it there's been base build versus a lessee's use? Who is responsible for maintenance of cranes, of air conditioning? Who's responsible for those items like cranes, air conditioning, roller doors break down? Is there a distinction? Do we want to loosen the ability to sublet and license to a related entity? If there's a change in control of the company, again, a lot of landlords will say, no, that needs landlord's consent, just like an assignment. Do we want to have restrictions on that? And again, just being careful about what services are included in the lease. Again, often the landlord will have a sneaky clause in it that says if something is not separately metered, the tenant pays that separate metering. If you don't want that, change that. What is the method of rent review? Again, is there a distinction between during the term versus on exercise of option? Dates of exercise of option. With a market review, what is to be included in the market review? often a trap is where landlords will say, upon exercise of option and you do a market review, landlords will not take into account incentives, right? For example, what do we do about capping a market review? Do we have a method of review, the greater of two methods under the Retail Leases Act that is prohibited? So these things become absolutely critical. And just quickly, just because I've realized I've only got about 15 minutes left, disclosure statement. Again, that will depend on whether the Retail Leases Act applies, and I'll go to that in a minute. If we have a retail lease, a disclosure statement, particularly in New South Wales, and it varies slightly in different jurisdictions, but it must be provided. And the format is as prescribed under the Retail Leases Act. It provides key information. If you don't disclose certain information in that disclosure statement, for example, outgoings, you can't charge them. If there's going to be proposed works to a building like a shopping centre, you should disclose them. And so that's important. If there's going to be proposed demolition or relocation provisions, they should be mentioned in the disclosure statement. In fact, that should be a key element in your lease as well. It is an absolutely critical document. And just to be clear, I haven't got time, it's going to be a whole presentation. Does the Retail Leases Act apply? Generally speaking, under the Retail Leases Act, a Retail Leases Act applies if it's either the premises in a shopping centre or is deemed to be a retail lease. It's a shopping centre if it's known as a shopping centre and there's a cluster of 5 or more shops owned by the one landlord, for example, and it's treated as a shopping centre. And there is a list of, or it's a retail shop if it falls within a list of prescribed uses, and there's a whole shopping list, and just to as an example, and there's a whole lot of them, and I've got them under the regulations. It could be a gift shop, it could be a lottery agency, a martial arts supply shop. The big one, there were some big changes in the start of 23, where, for example, gyms, Pilates studios, small bars come within the ambit of a retail lease. So that has implications, for example, where you're leasing an industrial property you think is not a retail lease, but if it's, say, to a gym, it may now be. There are exceptions depending on how big the premises is or how long the lease is. There are some quirky examples where there's a mixture of retail and commercial, and there's a whole lot of case law, again, which I won't go into today, on what happens if there's a mixture. So it all becomes, in New South Wales anyway, what is the predominant use of the premises? And there's some weird variants. So I've had examples where there's a restaurant and there's a separate license to a lift shaft and a loading dock. The license to the lift shaft and the loading dock, because they were sufficiently connected to the use of the restaurant, which is a retail lease, they got caught, the license itself got caught up into the Retail Leases Act as well. And so again, we often spend a lot of time talking about to our clients and debating about whether it's a retail lease or not, because then there's a whole lot of rules that apply, like I've just mentioned about the disclosure statements, but also even things like how the market review happens. There's a whole process about the market review. And again, I can do a separate presentation if you would like, if there's enough demand on market reviews under the Retail Leases Act, for example. And that gets me about 10 minutes to go on mixed use developments, which I can probably cover off. Now, what is a mixed use development? Typically, it could be, just imagine, and you see it, a classic example is, many of you, I'll use this as the best example, if you're driving to Sydney Airport around Mascot, you will see this a bit, where you'll see down the bottom of a building, either retail shops or commercial type uses like offices, etc. And up the top, there'll be residential. And there's a few things which come into play. For example, knowing what the property is being leased. Are you leasing a particular, just that particular, and I'm focusing on the commercial or retail lease in such a building. Are you leasing only the unit or the car parking space and storage space attached to that unit? Right. And then again, that whole discussion we just mentioned around retail, is it a retail premises? And therefore the Retail Leases Act has to apply, and therefore the landlord has to draft a lease accordingly. But also, and where this is more common than not, more often than not, is it'll be in a strata building. And if it's a strata building, the strata schemes legislation applies, and therefore that needs to be thought about fairly carefully. So if I'm acting for a tenant that is going into such a mixed-use building, again, the outgoings issue is critical. What is the tenant contributing to? Just the general strata levies, which are usually the expenses to run the building, or is it also special levies and sinking fund? I try and get sinking fund taken out and special levy taken out, so varying degrees of success. I encourage the client to do due diligence by getting a strata inspection report. $500, $300 to $500, you can get access to, with the owner's consent, the strata roll. The strata roll has evidence of the last 2 or 3 years of the owner's corporation or body corporate meetings, which will have details on money spent on the building, lurking problems like cladding issues, fire safety, defects, and budget for sinking fund, as an example. There may be other red flags, but it's a very good document to get. And what happens in terms of approval? So, for example, if you want to, as a tenant, put signage on the outside of the building or need to upgrade power supply, and I've had these exact matters happen, you might not be able to do it because particularly if it's on the outside of the building on common property, you may need to get owners corporation's approval to do it. And even they need to be a bylaw registered to give you the right to put that infrastructure in to upgrade power or to put even a split system air conditioning motor or signage. And so what's the process? What's the cost? What's the timing? Will that impact on your ability as a tenant to open up and start trading? And an obligation on the landlord to do it, to get that for your approval, because often landlords will say, it's not my problem, that's your problem. But that owner's corporation will usually not want to deal with the landlord, but will not want to deal with you as a tenant. So it's about what wording is there to protect and what approvals need to be done. Also, you need a copy of the bylaws of the building because they set out what can and can't be done inside the tenancy without the landlord's approval, particularly because there's often noise issues. As I said, talk about the due diligence, getting the bylaws, strata, what strata approval is required, what car parking and storage spaces are required. The big one I've see go horribly wrong and disputes over is zoning. So often, I've talked about this mixed-use development, but is retail actually allowed, or is it only commercial? Is retail only allowed but no commercial? Is retail commercial actually not allowed and only residential? And even if a tenancy can operate legally, are there restrictions on hours of use and noise? For example, if a tenant wants to open up a gym or run a cafe, is that going to require a variation to an existing council approval or DA approval in place to allow an extension of hours of use? To do that, that might need owners corporation sign off, and the owners corporation might say, we're not going to agree to that because it's going to impact on the residents in the building, or noise because of noise at night, etc., or smells or whatever. So, and even if it is allowed, what modifications are required to the tenancy to reduce noise, to reduce smells coming through the building, to be able to operate at extended hours? So if you're an incoming tenant, you think, great, this is awesome. I've got a ready-made customer base, but you may in fact not have a ready-made customer base if you can't trade at night. So that is absolutely critical, but the cost it may have on your fit out to make those modifications, which always goes back all that again to my earlier discussion on the heads of agreement. If you're a landlord, the big thing is making it clear that the tenant gets an indemnity from the tenant. Landlord gets indemnity from the tenant for breach of bylaws or damage to common areas, because often a mixed-use building has a lot of common space to get in and get out of tenancies, car parking, etc. Indemnities for disturbances to adjoining tenancies or tenancies within the building. Being clear to make sure you're disclosing, I'll go back to my conversation around disclosing outgoings, particularly in a disclosure statement. Where it becomes tricky is particularly if it's a new complex. Disclosing any planned developments, particularly again if it's some sort of mixed-use development that's old, and that's where demolition clauses probably become important, because imagine if you're a landlord, you're leasing out just one space to a tenant that doesn't have a demolition clause that then stymies the rest of the building to be able to do some form of redevelopment. Be clear on if I'm a landlord, what I can pass on to the tenant, and making clear that you'll give no warranty to the tenant regarding approvals from any authorities for all the things I talked about before, whether it be hours of use, modifications to use and fit out, or approvals from the owner's corporation. That gets me to 5 minutes to go. So I really rushed through that, thinking that I wouldn't be just over the time. So if there are any questions, which I can't see any in the chat, please feel free to raise them. Speak now or forever hold your peace. And well, if there aren't any, and I can't see any, I could be wrong, I'll raise a couple of other issues that I didn't raise that I might raise now. Just a couple of things, and particularly in New South Wales, a common question that comes up is to register or not register a lease. It is bottom line, any lease over 3 years must be registered in New South Wales. And as a tenant, it is important, because if the lease is not registered when it's over 3 years, and that's term plus option, then when the landlord sells the property, either by choice or via mortgagee possession, the incoming pay he's not obliged to recognise your legal interest in the property. And if you're a landlord, there is case law out there that where you have had an obligation to register and you didn't, whether the tenant has a cause of action against you, if then the new buyer does not recognise your right. And to register these days, it's on the PEXA platform. So it means the landlord has the obligation to register on behalf of all parties, which means that the landlord's lawyer or conveyancer needs to do a verification of identity and get an authorization to go through the PEXA platform. You don't need a physical title anymore. We don't even need a paper document anymore. Documents in New South Wales can be signed by wet ink. In Queensland and other jurisdictions like WA, South Australia, Northern Territory, you still need wet ink. So that's critical. Also, another common question is, how do you invest if a cash deposit is being provided? If it's retail, and this comes up often, particularly for those landlords who are inexperienced, if there is a cash deposit being provided pursuant to the Retail Leases Act, it has to be invested with Department of Fair Trading, and there's a whole process. It's these days best done online rather than through a check, because it can go missing. If you're a landlord that's not retail, you usually invest it in and usually there's clauses you want to put in the lease around that, interest-bearing account. And the other issue which often comes up is in bank guarantees, and making sure that bank guarantees get returned on termination of leases. And that's why we often put in a clause in the lease that says the bank guarantee gets returned on the later or the later of X amount of weeks after termination, or the lessee satisfying all their obligations under the lease. That's a really important clause. And just, making sure if you're representing, which either party you represent, making it clear on whether there's a top up every year or whether you just have a fixed amount. It's far cheaper for a tenant if there's a fixed amount. If that means a higher amount, so be it, because it's based on the the ongoing rent. So that's important as well. The other one, just quickly, is insurance. Came up as a question yesterday from a client. The norm in New South Wales is tenant provides their own public liability insurance, plate glass insurance, insures their stock, fix and their fittings, and takes out usually industrial special risks policy, and notes the landlord as an interested party. The tenant also reimburses the landlord in outgoings for the landlord's insurances, and that can vary depending on the lease. It could be just building insurance, but it also could be the landlord's public liability insurance, loss of rent insurance, and a whole host of other things. So again, look at that issue. And lastly, just because a landlord is no longer required to produce a title to register a lease, a mortgagee is no longer required to produce a title to register a lease. if there's a mortgage on the title, it is still important for the landlord to obtain the mortgagee's consent. So when I'm making for a tenant, I always ask that question as well. Okay, thank you everyone. That gets me to midday. Really appreciate you coming along. Please email and reach out to me if you have any other questions. And if you'd like more detailed presentation on specific aspects of today's presentation, I am more than willing to provide that. And in the last slide, I think, is my details. So have a great day. So well, hang on, there's a hand up. Oh, I think there was a hand up. I'm not sure. So that's my, I think that's my hour, and I think my marketing team is about to turn me off. So I'm not sure how they do that. I'll leave that to them.